And many exchanges try to forbid death spiral finance structure. But they are really hard to catch because they can look a bit different.
You've just jumped into our masterclass about bad investments. Welcome. We have our business lawyer, Kat, that is going to explain the death spiral finance for us. So get ready because you do not want to miss this.
Yeah, and our what we can give you is the hardcore facts,
Yes.
the legal basis. When you know what to look for, you will, I'm going to say quite easily, this is not legal advice, it's not financial advice, it's knowledge sharing. But you will be able to assess for yourself. Because this is knowledge that you might not hear from the financial gurus. So
This episode is powered by Key Solutions. We're so happy to be here.
So that's why we're sharing it. And today we're going to share something really scary, right?
Yes.
The death
Spiral finance.
Yeah. So what is it? Firstly, we're talking about a publicly traded company. So if you have shares in stocks in an exchange, this could happen to that company. If it does, sell fast. If you're approaching a company and you can see that they have this kind of financial structure, sell fast.
Really
That's just me, personal opinion, not advice. So, example. We have Optimistic Company LLC. Today they have a price per share of $10, but they are struggling. They need new finance. Really, really struggling and really hopeful. They think that if they get their new patent, everything will just take off. So it's just a little dip in the road. But they've been trying and haven't found anybody grabbing sufficient amounts, right?
So what do they do in this situation?
They are approached by a lender that says that they can issue a convertible loan of $10 million. Nothing funny about that, right? And the terms and conditions of this loan is that they want the discount. Not shocking that either. But they want a discount that's floating. So they want a 20% discount of the current market share at any point in time. And they can decide when and how much to convert. So the lender, that's called a Mr. Greedy LLC.
Yeah, he's back.
He's back. This is his financial lending distressed debt institute. So Mr. Greedy can decide when to convert and always knowing that he will get a 20% discount of the current stock market price. And then you calculate that on the volume-weighted average of 2 days prior to them calling on the conversion, or 10 days or 5 days, depending on the terms. And he even demands a ceiling. So he says, and never shall the conversion price be higher than 12, for instance. That's even worse for the company, right? Because then the price cannot go up as much, but it can always go down. So the worst case is they even have a ceiling. And in the best cases, the company can negotiate a floor. Like, no, you cannot convert to lower than, say, 5. But in this case, we have no floor, which is typical. Yep. And sometimes they even get warrants and other things, but we can get back to that. So what happens? Number one, they have issued a loan to Optimistic Company LLC. They got the $10 million, and now they want to convert $2 million. So remember, this is a rather small company, so that the loan size is sufficient to have a sufficient impact on the overall market value of the shares. Because if it was tiny fraction, it wouldn't make a difference. Like if you were to issue a discounted new share issue to some employees or something, then this would not happen. The death spiral will not happen. But in this case, so they want to convert $2 million. And then we look, what was the volume weighted average? We have a price of 10. You can just write price per share 10. And they get their price with the discount is 20% discount of 10, then we have 8. So now what happens in the market? Because they are not long-term owners. They want out. So typically they will turn around and flip to make a quick profit. And they can even sell short, and we'll get back to that also. But then what typically happens in the market is that, number one, we have more shares outstanding, which means supply and demand, more supply, that leads to the price typically dropping. And we also have the conversion taking place at $8, right? So they just want to sell their shares at anywhere between 10 and 8. So typically, the stock market, the price will drop so that the price per share will afterwards be 8. Suddenly, the price drops. Okay, then we have step 2. Now, they want to convert another $2 million US. Okay, and then what was the price per share this time? It was 8. And what is then the conversion price? If we have 8, then we have a discount of 20%.
That's 6.4.
Perfect. So as you can see, the spiral has begun.
This is
So
scary.
now, So now suddenly, just because of the action of this lender, we went from a price of 10 to a market price of 8 to a market price of 6.4. I don't know if should we flip side and do one more just to see step number 3.
We do like this.
Yeah. Now again, they want to convert another 2 million because remember, as long as they have the 20% discount, the ratio if they sell fast, they will make a profit, and they can work to push the stock price down. And the price per share, the market price this time was 6.4. Perfect. And then we want a 20% discount on that.
And that is 5.12.
As you can tell, it's the spiral. I mean,
Yes.
we're already at 50% of 10.
Yes.
Right?
And it happens very fast.
Very fast and outside of anybody else's control. So you, as the current shareholders, will get completely diluted based on the actions of this lender having such advantage in their terms and conditions. So that's why we're saying, and many exchanges try to forbid death spiral finance structures, but they are really hard to catch because they can look a bit different. You don't even have to have the exact same terms. It can be contractual, you can use warrants. There are different ways to kind of make it work.
Yes, but what I can see now, there's no return.
No.
It feels like it.
No
because
return.
now we're down to the halfway down the spiral.
Spiral down. And what's even worse is that this Mr. Greedy, as we're calling this lender, he has also gone short. Gone short means he's betting that the stock price will go down, which means that he borrows shares and he sells them and then he buys them. So let's say that here in the beginning, let's say he goes short at 10. He borrows a share at 10, right? Sells it at 10, and then he knows. I mean, he can even convert with a 20% discount. So he converts at 8 and gives that back. The borrowed share, he gives it back. He already sold it and makes a profit of 2.
Wow.
So he can work in many ways to actively drive down the share price while making sure that he and only he profits from it. Oof.
So of what I can hear, I don't understand why people use this strategy.
No, and that's why the exchanges, they want to prohibit it because it's so horrible for you other investors. And if you ever see it in any company you're looking at, they will be typically be small to mid cap, not the big size companies because they're not that desperate. But what you see also in the research is that many of the companies that accept this kind of finance, they're really optimistic. They think that if I only get this patent, if I only get through this dip, I will make it. I just need quick finance and then I will get out. So learn to recognize these structures because they are horrible, they suck, get out.
Get out.
Not financial advice, our opinion.
Yes, our opinion. So, I mean, this is really good.
So it's a death spiral finance.
Yes, and now you know about the death spiral finance. It's just as it sounds. So, as we said, watch out for this.
Bad investment.
Bad investment. And this was one of our episodes in the masterclass about bad investments. And if you want to stay ahead of the game, you have to subscribe and like and share our channel to your business partner or network.
And let us know if there's any good or bad investments or you disagree or have any questions. We would love to hear.
We would love
in
to hear
particular
that.
about the bad investments.
Yes, and if you have experience, I mean, please share it, as Kat was saying. So thanks for today. And I just want to say that this episode is powered by Key Solutions. We're so happy to be here. Thank you.
Hej då!
Hej då!